posted videos. I have not took these trades. I just want to say, I solely want to share an idea. So, first of all, whatever I post on my YouTube is like with my trades that I take. Like in between that, I'm not taking any more. So like when I'm not posting a trade for like 3 weeks, which it's been, I know I've recently posted one which was a loss. Which, bear in mind, I'm not like, look, it was a loss, right? I fully accept that. But my stop loss was the actual high. So the bar went 92. My stop loss was at 96. If that's correct, I'm pretty sure. I can quickly check. So, but and then I got with kind of because I've got a particular screenshot on my phone that I want to stay on. I think I've done a YouTube post real time, so I can quickly look at that. But yeah, I can keep the music on. Yeah. Oh, here. So, my stop loss was 96. Like, you cannot make this up. Like, well, no, that's like a figure of speech, but like, it's just so, it's like, really? You know, I ended somewhere around here, and then I had my stop literally at the high. It's like, really, And then anyway, I also missed a trade on GU, I think on the same day, because on this market, I hadn't finished my outlook anyway, so it's okay. So like, I fully accept that I missed it, but like, you see, so like the market was set up, like you can just tell even by looking at the 15-minute that the market was set up nice over all time. Yes, we were sat at the lows of the daily relative chart perspectives that hadn't pushed, like right at the very lows, if I already haven't pushed, overextended, healthy candle quantity. Push that had already been consecutively pushing to the downside over many bars in like one go, and it pushed in the entirety of its previous Saturn ranges, push range high and low, and extended and formed in an overextended fashion right below the low. So, but it was still kind of set up to keep pushing. It was very iffy because it just came off pushing, and like to the downside primarily, and it wasn't really set up in that convincing of a fashion immediately after it was pushing very heavily angled to the downside with next step higher time frames. For example, then to the daily, that would be like the 2, 3, 4 day, and weekly set up the way they were to just keep pushing lower based on how previously participants had traded like over recent time durations relative to those time frame chart perspectives. So for example, what I'm referring to is if we just go to the weekly, and bear in mind, I'll go on the idea like thing. I'll get back to that. I know I'm digressing as usual, but so like obviously we're in the same week. I know I'm referring. Well, yeah, I'm referring to GU, but they're basically the same thing. But just, you know, in case there's any beginners, they won't be able to comprehend why am I looking at Euro if I'm referring to GU. So, so we're in the same week. And I just also want to say, so I'm just gonna quickly, so So I just wanted to type that up just in case I completely digressed and forgot what I was going to say. So first of all, we'll refer to this. So yeah, so like I said, the daily had just came off pushing to the downside relative to the GU trade that I'm just covering, that I missed, because I was typing up so much stuff. And yeah, I've learned my lesson with that, though. That's a lesson to just do your outlook and just assess the charts. Like, it's weird, like I can just look at the chart. I don't need to do all this typing up, but the typing up helps, and then I can sometimes get carried away with it. But like, it doesn't matter how you focus, how extensively deep you go into dissecting exactly how the each relative time from chart perspectives at and push or trend, whatever you want to call it, aka like the bars that are consecutively pushing in a certain direction, meaning like, for example, the weekly in this case, you can see that weekly, there's a strong weekly in play at and push to the downside unfolding, where over consecutive weekly time durations, participants primarily are seeing up to now to continue to keep trading the prices primarily to the downside over the entirety of the weekly time duration, and then the next, and then the next, resulting in bearish open, high, low closes. And measuring the intent to trade, show like the conviction participants have per weekly time period, is represented in the bars, in the way the bars close. Now, I do also, and so like you can see how the intent to trade has evolved from the place where this push first started to be accentuated and pronounced, meaning like stood out in terms of like, yep, okay, this is now the at and push and play, which was from this bar, based on how this bar, like, I'm gonna have to come up with a concept to call it, where like I mean, I already have, to be fair, to some degree, just like coming off from pushing in whichever primary direction. But like, when you've got like a bar like this, where like it just confirms that like this push is done. If you look, this push to the upside is above this range, this at and pushes to the downside range high and its entirety in a nicely structured fashion compared to this push to the downside. And then the way this bar then closed, like, confirms that, okay, yeah, this push is done pushing, and now this push is now the in play. However, that like subsequently, like, however, whatever happens to this push from this bar is contingent upon how our bars close, like, and like, so as of this point in time, you would just be expecting downwards push, right, over like, which is just basically applicable to that next bar, right? And that doesn't go with that. It doesn't mean that it's just going to push to the downside. Like, it could form its wick, and it probably would, based on how overextended this bar on next step lower time frames would come across as. I mean, you've really pushed to the downside. It'd probably form its wick, push up a little bit relative to daily bar, and then you would see it primarily push to the downside. And then however that push continues to become structured, like, influences how it's likely to keep pushing, like, all reflective of the intent. So like, for example, as of this, the way participants trade, like, over this weekly time period, they didn't trade with the prices that define the market in the fashion that would suggest that this push is done pushing, and it's likely to just keep pushing as of this bar close. It's not structured in a fashion, the push to the downside, that would suggest that participants are done with pushing to the downside. They haven't shown any signs that they don't want to continue trading to the downside. So yeah, so like, when the daily had just came off from having pushing to the downside, and then the weekly was set up such as this, like, intent to trade relative to the weekly is not set up anywhere near off the sort what's influenced the way the push's structure is set up. That would suggest the push is done pushing. It's likely to just keep pushing to the downside. Yeah, it's well below its previous at and pushes range low, which would be here, and it's very overextended, meaning there's a lot of bars comprised within the trend to the downside that the market's just been consecutively and consistently keep pushing to the downside. But it's ultimately dependent upon how the push is set up itself, in regards of whether a reaction is likely to take place relative to where the at and push starts to set up in a particular fashion where it's likely to be done pushing, based on how participants trade the underlying product, like, over weekly time durations. If you're looking at the weekly time frame chart perspective, trend in play, that would then show that, okay, participants are showing signs that they are no longer willing to trade with the trade the contracts placed at the prices defined in the market at these price levels, right? In the same way as they previously have been doing so over many past time durations, which would kind of figure anyway that that trend is likely to fizzle out. What I was thinking just before is when you breathe, right? You breathe up. When you're breathing in, think of it as charts. You're breathing up, and eventually you're getting exhausted, and then you have to breathe out. Then that trend comes to an end. An inflection point or inflection. I think it's inflection. Just so I'm right. Inflection, I think.
Inflection.
Yeah, inflection. So like the inflection point is just where like the part within the trajectory of something, like the angle or the path, like, right. Yeah, so the curved path that an object follows after it has been thrown or shot into the air. So the inflection point of where the push like stops impulsing to the downside. This is impulsing. It's not impulsed, meaning it's not done. It's actively impulsing, right? The setup state as of the most recent bar close, right? But like, think what I was thinking of is like everything, like whether it's the charts, which is just a graphical depiction of human behavior. Everything has like everything comes to an end. Everything starts. Everything impulses, and everything trends. Like literally everything trends. The like if people are all there's some bananas on my table. If people at shops are there's a trend that people are always buying bananas over, for example, daily time intervals, right? And like the amount of people that buy bananas, like that's influenced within that trend. Think of it like a bar chart too, like a bar chart. I think this is what it's called. I don't actually know what type of chart this is. I know it's a time based. It'd be like a time based bar chart. That's it. Yeah. So, but I know that some bar charts are a bit different. For example, like the ones at school where like you'd have a time at the bottom. Well, I guess this kind of is that, but then you'd have like individual columns, like for like certain categories. You know, like for example, how many people like lions, tigers, and then you'd have the age at the bottom or something of the or gender or whatever, and you'd have it looked like something like this. So you'd have this, and then you'd have like this bar, this bar, this bar. So I guess it is kind of like a trend because you could still formulate like some sort of trend with that. But what I'm referring to is like a trend-based chart, which in my opinion I would just refer to it as a time-based bar chart, right? But this is specifically a time-based open, high, low, close chart. But anyway, going back to what I'm saying is like, if many people are buying bananas, that you could definitely assess the intent to buy bananas as trend and when it's likely to hit an inflection point and possibly turn over, and then how over the next time period people buy bananas, like after that possible inflection point. For example, think of it like a doji has unfolded after an already heavy push of people just buying bananas over many time durations to the upside. That's likely to come to an end, and then that could be confirmed over after the inflection point in the next bar, right? Or if they buy more bananas, then no, it's probably not done, and it's likely to, and it's overextended, so it's not extending, it's overextended, but there's likely to be some more steam left based on the way the most recent bar closed, like amongst the existing structure of the RR and push, and you would just be tracking the trend based on bars, right? Basically like, okay, because an ensuing push could emerge, and then it could start to then be extending. But if the next bar like closes like a wick rejection, like people buy bananas and then people like don't, like at this region, it like the contextual relevance of how previously participants had in the shop had already traded had already, well, I guess you are trading, I guess, had already bought bananas, like it could suggest that that trend's likely to come to an end. But anyway, going back to what I was saying with the breathing thing, think about it. I just want you to, for the next like few seconds, right, maybe pause the video after I've said this and breathe in and out a few times. So I'm going to do it just now. There's inflection points within your breathing on the incline and on the decline. Meaning incline, meaning you're breathing up, and like, and then on the decline, if you breathe up, you're gonna breathe down. Otherwise, you die. So it's whatever comes up comes down. Whatever goes down comes up. It's the same in the charts, right? And you can assess that based on how bars close, reflecting the intent to trade the underlying product. Like now, like you can assess it's the same within breathing. You get for however long you start, however long that, like of course it's not long, but like on one initial breathe up, like based on how long you've been breathing up, you could suggest, okay, well, yeah, you're overextended. You're likely to near the inflection point and then come down and then the same over again, right? But anyway, as of this most recent weekly bar close, the way participants had traded and facilitated and facilitated the push to the downside and influenced the way the push as a whole was structured and how it was likely to keep pushing. Like they didn't trade in a way that suggested they were done with trading the week trading. The prices that the contracts placed at the prices defined in the market were trading at, that their intent to trade with those primarily on the bid side, meaning like selling to the bid, right? Like that side of the market, the sell side, is done over weekly time durations. And then on top of how the daily was set up, being iffy, like not really that convicted of a daily bar close. Yes, it was at the very lows, but like with the weekly chart set up like this, it just was very, very iffy. But anyway, yeah, like the 15M, hang on, let's just see. Yeah, so the market was just set up right relative to, like, I think it was something like the 12, the 8, or the 9 or something, and the 4. And I know there was definitely time frame set up because I was like, shit. Because I initially looking at this chart and I seen that there wasn't actually, yeah, no setups forming today. Yeah, but you see, these were equal. These weren't. This bar didn't go above this initial hour Frankfurt as high. It didn't. So, I was like, okay, I've probably got lucky because I had just finished my outlook, and then I've seen this about here. Or something like that. I think it was about here. So I guess I could have waited actually, and I wasn't actually thinking of this in the time. I see I'm being completely transparent. I don't know why I wasn't thinking that of, like, oh well, I could get an entry back again. But anyway, that wasn't the case anyway. Because what could have happened is if the price came back without hitting the 1-to-1, which I would have had to stop about here, maybe it's about there actually. It depends. I'd probably have it about there, right here, like about. So I'd probably have the stop about here. Yeah, I would. Maybe it's about there actually, just a bit around this region, like not much around like 60 to 100, not 80ish region. You see at the crosshair, and I could have just re-entered if the market came back because that signal would still be active because it wouldn't hit take profit. So, because like for all I know, it could come up here and then it still might not play out and then turn over like the Euro trade, and that could like just re-enter as usual. But anyway, that wasn't the case. But this bar did go above this high, and because it did go above on a wonder, whilst the market was set up nice to keep pushing lower, I would have hit the risk. I would have went and took the risk. But yeah, so yeah, we're not going to get a trade on Euro either because what we were looking for in Euro was the market, like just an intra-session liquidity sweep right off the bat because the 1 hour is set up appropriately on side to how, I mean, look at, I just visualize it, but like this is the at-time push high, the at-time push range low, it came up. Look, as well, if you notice, look how many 1 hour time periods it took to push up to the extreme region of this impulsive push to the downside. Like compared to how many time durations relative to the 1 hour it took for the market to push down this amount of prices to the downside than it took for prices to be traded back up. It took many 1 hour time periods of participants consecutively trading to the upside, like showing that it's quite overextended, right, relative to the 1 hour, how many 1 hour time periods had been primarily pushing to the upside, you know. And then also look at like you've got the initial impulse phase like here, and then the inflection point starts to like happen here, and the trajectory, meaning the curve path that an object, or in this case underlying products markets prices placed at the best bid best offer, follows after it's initially been pushing to the upside, in this case, starts to then curve over, and then you've got like another inflection point, which is like the way that, like before, when the reversal starts to unfold, basically, which kind of bit iffy here, but then here it's like, yeah, okay, this push to the upside's done, and then you would track this push to the downside's momentum by bar closes, and it's showing you whether the intent participants have to continuously trade to the downside, in this case over 1 hour time periods, is coming to an end, or it's strengthening, something like that. You get what I'm trying to say. And what's basically like to unfold, and you can see like, as like, well, like you probably think I'm just hindsighting this, but I'm really not. It's like here, yeah, the push to the upside is done, doesn't look done, the push is structured, does not look done as of this bar close, and it's like as a result of the way people traded, like in this time period duration over 1 hour bar time periods, and naturally influenced the way the push to the downside was structured. Did not trade in the fashion what set up over the 1 hour, did not trade the underlying products market over 1 hour time periods in the fashion what would suggest the push to the downside was done, or in other words, the trend relative to the 1 hour of primarily seeing the prices being interacted with on the sell side over 1 hour time periods has come to an end. And even here it looks a bit iffy. So what you do is you utilize next step higher, next step lower, surrounding based time frame chart perspectives and pushes. But you can see the angle is still pointed for lower, but the way this bar closed like amongst the way the push is structured, it is a bit iffy, so it's just unclear. And then so relative to the initial time frame chart perspective, you'll be waiting for the next bar close. Oh, hang on, this was the most recent bar close anyway. And how it's set up, it's this push, the way participants then traded, like they've then traded again in the fashion where the push doesn't look done pushing to the downside, and the way this push is structured and set up to continue pushing to the downside, like where it's situated amongst its previous out and pushes range, it's likely to keep pushing towards this low based on how it's set up and its angle. And just think about it, like the push for it to become like done based on the momentum that's likely here. I mean, look, participants haven't shown whatsoever that they're like not willing to stop trading with the prices that the underlying product best bidder, right? And yes, we are at the very lows relative to the daily, but you have to also consider like how, for example, like all the time frames I've set up, like how the monthly is still, I mean, look, the 6 month, man. I'm not froze, but I can remember what it's set up like. It's set up to just pummel lower. You're right at the very highs relative to the 6 month, but then in the context or the reality of the prices the market's trading at relative to how the trend's been emerging on the daily, that's sat at the very lows. But how the trend's been emerging over 6 month time periods was sat at the high. So it's like painting the picture, So it's like, yeah, okay, it's probably not gonna have much influence like over European and modern trading session how the 6 month is set up like, but you're just painting the picture, right? Of like, it's like, okay, the 12-hour. It was set up nice for bears. The daily even was set up nice for bears too, to prevail primarily over the next daily time period. Even though it was set up at the very lows, it looked like kind of a new ensuing push may emerge. But you would just determine that by how the next bars close, like. So like how next bars continue to unfold, like tracking the momentum, keeping track of that momentum. Aka tracking the momentum of that trend and how it's likely to continue to progress, but like we're doing here. And this push is likely to keep pushing lower as of this most recent bar close. It doesn't mean like you can I only forecast the next bar close, but this is why I use all these time frames, because if I'm forecasting the based on how the trend has already emerged, meaning like how relative to, for example, the 3-day previous bars have like consecutively pushed, like, and that whatever trend is in play relative to how participants have been training, like over 3D time periods, like if I'm like, okay, well, if this was a 3D time period and it doesn't look done pushing, and the next bar is likely to primarily push to the downside based on participants not showing any intent whatsoever that they're done with trading to the downside, and the push itself, it's nicely structured, but its angle doesn't. They have, like, the way participants have traded, like over the duration this push has been unfolding, is they have not traded in the fashion that's directly represented in the way the push is structured. That would suggest the push is done pushing in terms of its trajectory. Look at its trajectory; it's angled right lower, and it's not hit an inflection point yet of stopping pushing to the downside. So relative to 1 hour, it's likely to keep pushing here because, like, what you also do is you use points of interest as objectives. So like, however the push is structured, like, and how it's set up to continue to progress, like in this case, not be done pushing to the downside and likely to keep pushing, where might it be set up the way it is to potentially be gunning for or pushing to? Well, you can use points of interest, like, which would be here. And then once the market reaches this, you'd want to see how the push is set up. So, like, if this next bar pushed 2 here, you would have to wait for it to close based on how you, whatever you, like would conclude what's likely to happen. And then also, if it's like, because, like, how next step high, I mean, the daily is likely to primarily push lower based on how the daily trend, right? On how the daily chart's set up, right? But, like, if this bar just melted lower and then left a nice wick right from here and then closed like this, it just came off from pushing to the downside still as of this most recent bar close, right? So you would want to check next step lower, next step higher time frames, and see indeed what's likely to happen, because it probably will be likely to push up a little bit, but just based on how the surrounding time frames are set up, like, you would want to be careful. But I'm going a bit off topic. I really have digressed big time. But what I was going to show was, I think I might have been on this chart, weekly. So hang on.